Imagine a deal so big it could shift the balance of the global economy, $550 billion. That's the kind of figure that doesn't just get whispered about in boardrooms, it shakes stock markets, rewrites headlines, and redefines alliances. This was supposed to be a victory lap, a signing ceremony in Washington where two of the world's strongest allies, Japan and the United States, would lock in a trade pact like no other. Instead, in a single stroke, Japan pulled the plug. No trip, no signing, no celebration. The shockwave was instant. Was this hesitation, or was it a signal that something much deeper was wrong? And if Japan doesn't trust America, who else might be rethinking their faith in Washington? To see why this matters, let's rewind. The plan was straightforward on the surface. Japan would commit an eye-watering $550 billion into America's economy, not just handing over cash, but carefully designed investments, loans, government guarantees, and funding for U.S. industries from clean energy to infrastructure. In return, Washington promised to ease up on tariffs, those heavy taxes that make Japanese products, cars, electronics, steel, more expensive for American buyers. On paper, it was a partnership born out of necessity. America needed the capital injection. Japan needed better market access. Both leaders could stand in front of cameras and declare victory. Two nations, standing shoulder to shoulder, building prosperity together. But politics is rarely that simple. In late August 2025, just days before the grand signing ceremony, Japan's top negotiator, Ryosei Akazawa, abruptly canceled his visit to Washington. Officially, Tokyo claimed the documents were unclear. Behind the diplomatic wording hid something sharper, suspicion that the fine print would leave Japan paying more, not less. Think of it like being invited to sign a contract where the ink looks smudged, the math doesn't add up, and the promises feel too slippery. Would you risk $550 billion on faith alone? Japan said no. But was this just about legal language, or about something far larger? The answer may lie in history. U.S.-Japan trade relations have never been smooth. Back in the 1980s, Washington accused Tokyo of flooding American markets with cheap cars and electronics, sparking fierce trade wars. Tariffs and quotas became weapons, and Japanese automakers were forced to limit exports. The scars of that era still linger in Tokyo's memory. So when Japanese officials saw new U.S. executive orders that seemed to stack tariffs on top of each other, alarm bells rang. This wasn't déjà vu. It was history threatening to repeat itself. Meanwhile, the timing couldn't have been more delicate. Washington wanted to send a message to the world, especially to China, that its alliances were unshakable. Japan's $550 billion was meant to symbolize loyalty, a financial pledge that Tokyo was betting on America's future. So when Japan backed away, even temporarily, the signal was dangerous. If America's closest Asian ally wasn't ready to lock in, how strong was Washington's word? What happened then? Markets twitched. Analysts began speculating. Would Japan divert that capital elsewhere? Europe is always hungry for new investment. China, despite tensions, has courted Tokyo for years with promises of friendlier trade terms. Could Japan be keeping its options open? Inside Japan, newspapers described the pause as wisdom, a calm refusal to sign a one-sided deal. In the U.S., commentators saw something darker. Hesitation at this scale makes Washington look weak, and weakness in geopolitics is contagious. But the bigger question is how this affects ordinary people. Imagine a Japanese car maker waiting to ship thousands of vehicles to American ports. Lower tariffs could mean cheaper prices for U.S. families and higher profits for Japanese workers. Now, those shipments sit in uncertainty. Or think of American construction companies hoping to use Japanese capital to fund new highways and green energy projects. With the deal stalled, those jobs and projects wait in limbo. This isn't just politics, it's money that touches real lives. And yet, the negotiators argue over commas and clauses. So was Japan overreacting? Or was it protecting itself from a trap? That depends on how you read the U.S. documents. Insiders said some of the tariff reductions were written in vague terms, so vague that they could be reversed with a stroke of a pen. Worse, some clauses suggested double counting, meaning Japanese firms might pay fees twice over. Signing blindly would have been like stepping into quicksand. What happened then? Behind closed doors, whispers turned to strategy. Some in Washington feared Japan was deliberately stalling, using the threat of cancellation to demand sweeter terms. Others feared something more troubling, that Tokyo simply no longer trusted Washington enough to commit. And in international politics, once trust cracks, it spreads fast. This deal wasn't happening in a vacuum. China watched carefully, ready to exploit any hesitation. If Japan was no longer sure about America, Beijing could step in with its own offers, cheaper loans, better market access, and the promise of stability. Europe, too, has been looking to Japan for stronger economic ties, especially as the EU tries to reduce dependence on U.S. policy swings. Suddenly, America looked like it was at risk of losing ground, not to enemies, but to competitors. So what does this mean for the so-called U.S.-Japan alliance? For decades, Japan has walked a tightrope. Its economy is deeply tied to American markets, but its geography makes it neighbor to China, North Korea, and Russia. Every choice Tokyo makes is a balancing act. By pulling back now, even temporarily, Japan is reminding the world that it won't be locked into anyone's shadow.